What's going on, everyone? My name is Nicholas Merton from DataDash, and I want to start off by saying welcome to this very important video here on the channel. And it's important compared to other videos because in this video, we're going to be doing an in-depth analysis and showcasing how I actually go about trading financial markets. Now, before we dive into the video, I want to give you a quick rundown to showcase what you can expect. We're going to be showcasing the three-point strategy that I utilize in trading financial markets. It has definitely changed throughout time, but this is going to be the up-to-date version as to how I trade financial markets. And along with that as well, we're going to be showing it in real-world examples, taking a look at a variety of markets from gold to Bitcoin, the cannabis boom, as well as taking a look at tech stocks and the NASDAQ. And outside of that as well, I want to make clear a few things right off the bat. Many people ask me, Nick, are you a day trader? Are you a swing trader? Are you a long-term investor? How do you approach markets? In this video, I'm going to be really showcasing what would be defined as swing trading because I consider myself a macro trader. I look for trend shifts in markets. I love to find emerging technologies, emerging changes and optimism or fear in markets. It's really what gets me going at the end of the day and why I love finance. So now that I've rambled on enough, I've given you a good summary of what I'm going to talk about in this video so you guys have a brief understanding. Let's go ahead and dive in depth and talk about the three-point strategy. All right, so before we dive into those three principles, there is one thing I want to note. We're talking about time frames here. Again, I'm a swing trader, right? So the first thing we have to keep in mind here is that I'm not going to be looking at the daily chart. Not at all. We're not going to be taking a look at the hourly chart or the minute chart. We're taking a look at predominantly at the weekly chart. But we also, in some occurrences, will take a look at the monthly as well, okay? And we'll talk about where we will use the monthly in some cases, depending on what type of trend we're looking at and what market we're looking at. All right, so now that we got that out of the way, let's go ahead and start on these three-point strategies. So the three ones that you want to write down if you want to understand my strategy is understanding the technical indicators that you're utilizing. The second one here is analyzing price. And then the third point here is to understand the trend that you're trying to trade, okay? So these are the three key points here. And I'm going to dive in depth step by step as we take a look here at our first example, gold, and we're going to apply these three different principles. All right, so the first one here is understanding our technical indicators. Now, I want to be very clear right off the bat. I'm going to be showcasing three today that I'm utilizing on my chart, but I not only use a variety of other indicators in some cases and random occurrences, but you can build out your own technical suite. I recommend sticking to around 3 consecutive indicators that you have seen work within your trading strategy. And they may be very different from the ones I'm going to be showcasing today. But the three that I'm going to be talking about today in my video is showcasing the squeeze momentum indicator, which is a very popular indicator here on TradingView, a custom version of a previous indicator that was created a few decades ago. Along with that, the MACD, and then also the stochastic RSI, which is an interesting variation of the RSI. Now, I'm going to go ahead and tell you all how I go about using these indicators. I actually use them a little bit off from their original intended way of being used, but they've been very useful for me in utilizing them in these specific ways in markets, okay? So what I look for in these indicators and how I utilize them, right, is I look for 2 out of the 3 at a minimum to confirm my direction of being bullish or bearish, okay? So bullish meaning prices going up, bearish meaning prices going down. Now, let's go ahead one by one and take a look at these indicators. For the squeeze momentum indicator, I am looking for a lower high when the squeeze momentum indicator is on the bullish side, okay? Now, the original use case here is when there's, there's gray crosses and black crosses, and you can utilize that in trading formulas. I really use it here to show a decay in momentum or a decay in sell side momentum, right? To the upside or to the downside here. So when we, for example, have a lower candle here on the weekly squeeze momentum indicator, this is showcasing to me that the bullish momentum is decaying in this case, that we're expecting likely the beginning of a trend reversal, all right? And vice versa here. We can take a look here, for example, when we set a higher low in this case, right? We're obviously setting lower levels here. Once we set a higher low here, in the sense of the squeeze momentum indicator, then in this case, we can expect that the trend is obviously going to start pointing towards a more bullish direction and price might start going up. All right. The next thing here is the MACD. Now, there's really 2 things I look for here in the MACD, but predominantly I'm looking for what's known as a cross. Okay. Now, a cross on a MACD can happen 2 ways between the blue and orange line here. When we have the blue line crossing through the orange line, this is a sign that in this case, there is a bullish trend, a reversal in this case, where prices are likely going to start ticking upward, and vice versa. When the blue line crosses through the orange, you're expecting that the trend is going to reverse downward. Now, another thing to look for as well is a decay either way in the divergence between these 2 averages here. Okay, these are 2 different moving averages. And if you start to see that, for example, we're getting a closing gap between these two lines, as we can see here, and as we can see here as well, then that can be an early warning sign that a cross may be coming soon. And it's something to factor in. But we use this in the sense of the cross, okay? Now, if we take a look here as well, the third indicator is the stochastic RSI. The way that I use the stochastic RSI is when both lines have either re-entered into the purple area from the bottom or have re-entered from the top. When the stochastic RSI has both lines re-entering into the purple range, which is the broader range here for the indicator, that is bearish to me. That means that the trend is declining momentum, and vice versa as well. When it comes back into the purple zone, that's when I'm expecting the price is going to start reversing to the upside, okay? So now that we understand those three things, and we understand that we're using this on a weekly time frame, let's go ahead and talk about it being utilized on gold. So gold has had a really interesting trend this year. In 2019, we really started to see precious metals break out. And we've had, ever since about a year from now, back in the summer of 2018, a 34% rally here in gold. So let's go ahead and talk about how these indicators showcased when that rally was going to start, and also how we were able in my recent newsletter to call the resistance point here where gold recently set its high and has started to decline on about a 2 to 3 week basis here, okay? So let's go ahead and talk about what we could spot here. Well, again, originally, as I stated here, in the first step, we look for a confirmation of 2 out of 3 indicators to signal a bullish potential, in this case, in order to look for a potential trade. It's best if we can get all 3, but again, we're looking at least for 2/3, the majority, okay? So the first sign here, we want to take a look at the squeeze momentum. Interestingly enough, after gold had been on a multi-week sell-off here, we finally, eventually, here between August 13th to August 20th, the change in the week here, where gold set a relative bottom for 2018, we had a decay here on the squeeze momentum where it started ticking upward. It started to go against that decaying or that lowering trend here on the squeeze momentum indicator. Not to mention as well, we got a cross on the MACD, right? You can see it right here. So the blue line crossing against the orange line a little bit later here, right? We'd already seen the squeeze momentum coming into play. So now when that cross happened, we had 2 out of 3 indicators, and look where the trend started, right? Okay, so we already have 2 out of 3, but we want to see here again, in this case, that all 3 indicators are signaling in. And guess what came in up before all of those indicators? We had the stochastic RSI, which had already started to enter into the purple zone back here in August. So again, in tie here in tangent with the squeeze momentum indicator. So we had all 3 indicators. It was in the middle of the purple zone, trending upward. It had exited. The last range it was at, to think about how I actually view this, guys, it's basically when the last range you were in, either on the lower band or on the higher band. If it was the lower band and it's entered into the purple zone, that is an upward confirmation. It's a positive thing for market prices to move higher. So we had all 3 things ticking off that gave us a good sign that the trend was going to reverse here, and that in gold markets we could see some optimistic movement. Now, in the sense of the sell side, we can see the exact opposite. We saw a decay in the squeeze momentum indicator. We saw what looks like a potential cross coming here soon. We've already had a decay here in the sense of the divergence between the 2 lines. And we've also seen as well that both lines have entered in to the mid-range here and the stochastic RSI. So all 3 indicators are flashing, at least 2 of them are flashing warning signs. And we've got a third that might possibly come to the cross. But this is just one way we analyze markets, through our technical indicators. We also need to think about the second component here, which is price analysis. Now, there are a lot of ways we can do price analysis, right? We have to factor in things like support and resistance, which we'll talk about in this example. We need to consider, in this case, big even levels, right? Big even levels such as $100 intervals, $1,000 intervals in price. Those are very important because they're rooted in human psychology. Human traders look for these big evens, right? We want to talk about setting higher highs or higher lows in this case, as well as lower highs and lower lows. That plays a big significance in this case. And we'll take a look at a few of these as well. And we'll dive through other things like pricing patterns, like bull flags, things of that sort later on, as well as divergences between the indicators. So let's go ahead and talk about some of the highlights here for price analysis, some examples. Well, we could already see here that gold, as it was holding at this price range, looked like it was establishing a low here. So we had higher lows here. this is usually indicative of a trend shift, right? That we're starting to build up for a market here because buyers are coming in at significantly higher levels each and every time that we have a correction or pullback in the short term. Another thing as well to take into mind, we recently talked in the newsletter, and I don't always like to just call my best shots, guys. We'll talk as well about how this strategy can fail sometimes, to be completely fair. But one of the things I talked about in my newsletter is we actually, for the month of September, called the peak in gold. And then we called that gold would start to enter into a correction. Why is that? Well, if we zoom out of the chart a little bit, take a look back here between 2011 and 2013, we actually saw that this level here, 1550, was a huge support range for gold. It served as support over 3 times in the past, eventually breaking for the 4th time. And as we talk about on the channel, as you probably heard me mention, if you're an active viewer to the channel, I talk about the principle of previous resistance becomes new support. And that also goes the other way. Previous support can become new resistance, right? So in this case, that's what we're seeing here, right? So we're seeing in this case, I actually wrote it wrong here to actually be fair on the chart. It's actually previous support is serving as new resistance. And again, the other way comes around in this case. We actually, in many cases, can see how previous resistance on markets where we had a struggle to get price, once we've broken above there, will sometimes come down and make that new support to continue the uptrend. So this statement can be an inverse depending on the scenario. Now, again, those are some key examples of price trends here. We don't really have much of a per se, bull flag. I will say one price pattern that we could look for here is what's known as a ascending triangle, which is a bullish pattern. And again, I don't have a lot of time to talk about, each in-depth part of TA here, right? But again, you guys can actually go check out our TA series if you'd like on the channel. There's a ton of videos that are really good to learn about charting patterns, things of that sort, and really apply some of these principles here if this seems a little bit overwhelming. I recommend you go watch that as well if you like to binge watch a lot of trading content. Anyways, so this is taking a look at gold here, taking a look at the secondary principle of price analysis. Now, we need to talk about principle 3 here, understanding the trend, right? Let's go ahead and take ourselves all the way back here, right, when we didn't have this price action. Why would we be, bullish on gold here, right? Sure, the technical indicators are showcasing that we might want to start, preparing for a trend reversal. Sure, even as we've been holding here at this level after correction, we have set higher lows here. The price is giving us some good signs. But what makes us so confident that we're going to see a trend reversal? Well, there needs to be a fundamental shift. And that fundamental shift in the case of gold is that the global economy, which gold serves as a hedge against, was showing a lot of interesting signs. Equity markets started to top out. Most economies across the world saw their equity markets starting to decline and enter what would be seen as in recession territory. GDP has started to slow down, global growth. Banking systems as well across the world, central banks have started to reinstate, in this case, higher interest rates, reducing quantitative easing, and that reduces stimulus for equity markets, leading people to look for hedges. And we've also got the negative yielding bond crisis, a whole nother topic to talk about. I don't want to plaster you guys with too much, but long story short, we did our research and it didn't take too long to figure out that it was time to get bullish on commodity markets comparative to other places. And taking in those 3 factors into mind, gold had within a year's time frame a 34% rally. For a multi-trillion-dollar market like gold, that is a significant move. And I believe it could continue to go on. I believe in understanding this trend that it's going to go longer, but I do believe we're going to have a short-term correction towards a key level that we need to consider. So what are those levels? Well, I'm looking at around somewhere around 1400 in this case, down to possibly making support down here on the previous resistance that weighed down price all the way back in 2016. Again, you might have different ways of viewing this, guys, but again, those are the things that I start to look for here. I look at the significant price levels and consider big even levels, levels that have shown significance in price, etc. Again, that plays into part 2 of our trading strategy. All right, so we've taken a look at gold. We've talked enough about gold. Let's go ahead and hop over to a new market and again, continue to apply these principles. So the next thing we'll take a look at is Bitcoin. Now, to let you all know as well, when taking a look at Bitcoin's price for these longer term views, I like to take a look at BLX, which is the Brave New Coin Bitcoin Liquid Index. And this gives us a good range of the volume and the price action of exchanges across the board. So we can get a really good sound amount of price data, and not to mention a length of price data here, really back all the way to 2011. So let's go ahead and apply these strategies on Bitcoin. Now, our strategy that we actually utilize works pretty good here with Bitcoin. we'll go ahead and talk about the first part, technical patterns. So we look at our 3 different indicators here. And we can see here, let's go ahead and talk about the previous high and also the bottom here in Bitcoin. The high that we set back here in December of 2017 and the low that we set here in December of 2018, about a year time frame. So taking a look back at 2017, the first thing we're going to take a look at is our indicators. We had a very big rally in the squeeze momentum indicator. But here on January of 2018, where price started to push sideways, about $5,000 off of the high here, we started to see the squeeze momentum indicator decaying in momentum after a very parabolic rise. This should be a very big warning sign, especially when you've had a huge push to the upside like Bitcoin has, right? And along with that as well, we can see here on the MACD that we had a crossing a little bit later here on January 15th. Now, this was a little bit later, but you could start to tell as early as December of 2017 in the early part here on the week where we set the peak, right? The week after, we had a drop. And again, on those parabolic rises, when you can start to see huge leaps, when you start to see that decay, that scares a lot of traders, especially considering we're taking a look at the weekly time frame. Eventually, we got the cross not too much later when Bitcoin was trading around 11 to 12,000. And then the other thing that we had as well was that we had revisited back up here, and we had both lines cross into the purple zone here in between the middle of the indicator. So again, taking a look at these, we could start to see that these were coming into play. Now, if we take a look at price analysis, there really wasn't much to go off of, but there was something that's very important to understand about human psychology. And as I mentioned, that's big events. And after we broke through 10,000, it was very clear to most traders, we talked about here on the channel back in December, that the peak was likely going to be around 20,000. And we did peak out across most broad exchanges because, again, as silly as it seems, it's human nature. We care about big even levels. Now, we talked enough about that. Let's go ahead and take a look at picking the bottom here. Now, again, taking a look at our indicators, we started to see, again, a slowdown in the decay of the squeeze momentum indicator, right? All right. We also, as well, had a cross on the MACD, and we started to enter into the trend here for the stochastic RSI, right? All 3 of these right near the bottoming range here. And we also saw that in the previous cycle, right? The weekly starts to re-enter in. And again, I guess we can't really see here because the squeeze momentum was so different, but we'll go ahead and go back here so we can start to see it. So again, the squeeze, again, started to slowly decay over time. We had our first indicator here. We got a real solid clear cross on the MACD that held above. Again, that's another thing to look for as well. Sometimes you want to see it hold above the orange line here, hold this different divergence, and then also, again, a build up here in the stochastic RSI, right? Now, the one thing I want to talk about as well is the relevancy here on the monthly, right? Bitcoin moves to these 4-year cycles that's commonly referred to as. So if you take a look at the monthly, we can see a very similar story, right? Towards here on the bottom, I'm going to go ahead and get out of the logarithmic chart so we can see this a little more clearly, right? We got both lines here back in May, right? As the momentum was starting to build up. We had a very clear sign here on May as well. The monthly squeeze momentum started to go upward after a declining trend. And we also had a crossing on the MACD here in June. So again, on the monthly, you can get some delays here. I think the weekly is usually better for most markets. The monthly chart, as we'll take a look at later on, is usually best when we're taking a look at equity cycles, right? That move in 8 to 10 year periods, right? That's really what we want to look for. So again, I like the weekly on this. Again, another thing to take into mind here, we could start to see the market in the short term peaking here when we saw the squeeze momentum setting in a lower high here. When we started to see that divergence stagnant here after a rise and started to actually set lower levels into July, and when both lines came through here, right, we could expect that we're either going to get sideways or correction period, where we're losing the momentum in the market. And again, as a trader, right, you're looking for those momentous shifts, right? We want to ride Bitcoin when it's moving up. If it's pushing sideways, perhaps maybe there's another market to look at. But for me personally, I've been very bullish on crypto because I'm trading for a much longer term cycle, right? And that's really, again, leading to the third point here, understanding trend, right? I'm playing for the much longer term trend. I don't believe that there's any potential real optimistic opportunities in equities outside of possibly shorting markets about a year or two out from now. And then outside of that as well, commodities, things that sort, I think will go up, but not to the pace of cryptocurrencies. So again, I have a longer term time frame in my window at the moment. And you know, there's one thing I forgot to mention as well, that crypto markets tend to go through 80% retracements. So this would be an example of a price analysis on Bitcoin, right? We're taking a look at previous trends here. Bitcoin goes through very parabolic run-ups, and it has very harsh corrections, usually around 80% in most cases. All right, so we've taken a look at Bitcoin here. Again, you can see how, again, my trading strategy, as much as I like it in this case, is not perfect. In some cases, it doesn't call the absolute top, right? It's never going to be perfect like that. But it's a good way, again, through these different 3 steps to understand where we might be in a given trend in the sense of using our technical indicators, price analysis, and understanding what kind of market we're dealing with and what kind of trend we're dealing with, okay? Now let's go ahead and take a look at a market that a lot of people love talking about as well, alongside the speculative market of cryptocurrencies, which is the cannabis market. Now, we're taking a look at CGC, or Canopy Growth Corp. This is one of the major Canadian cannabis companies that went public and is traded on the New York Stock Exchange as well as the TSE, which is a Canadian exchange. But let's go ahead and start off from square one, right? Let's take a look at our technical indicators here on the weekly chart. Well, first off, you can see from both peaks here, in the short-term analysis, that we had a decline right here as we started to enter into both corrections, right? When we set out both relative highs. Simply taking a look at the squeeze momentum, taking a look across at the MACD here on October 22nd of 2018, and also both times as well, stochastic RSI being one of the leading indicators to showcase that the momentum was over, right? Now, these came in a little bit prematurely, but notice what happened after. There's no change in price. They just pushed sideways. In fact, in the short term, they kind of decayed before they really entered into their downturn. So again, as a trader, these might be a little bit premature. Price might still move sideways, but we're looking for momentum either way, to the upside or to the downside. So again, it means that after maybe a long bull run like the cannabis rally had, and we'll talk about it in a minute in the sense of understanding the trend, again, we're factoring in this fact that there might be a shift coming very soon. Okay. So, very good example of taking a look at the indicators here. Let's take a look at price analysis. Well, we had very consistent resistance here at $50, big even level. Not to mention as well, over time, as we were setting, again, we're taking a look at the logarithmic chart. But you can see here very clearly here, if we just take a look at the normal chart here, the rate in which lows are rising started to grow stagnant. And we set in a lower high here. This combination of a lowering momentum in the sense of new highs, right? They might be rising here and eventually they reach a flat line, is not only a bad sign, but when it's in combination with lower highs, again, we saw this 2 times, that's not a good sign, okay? That's usually a sign that a correction is coming and that the momentum is dying. And in the opposite way, that a bull run might be coming if you're setting consistent lows and also lower levels of resistance in this case. So, all right, and the third thing here to take into mind as well with cannabis stocks, and I'll kind of state this for Aurora Cannabis, which will be our second candidate to take a look at. The important thing here is that cannabis, and I can tell you guys I've been following this market since 2011, is highly speculative, and if you took a look at any of the fundamentals, you knew that this was a short-term bubble, right? They weren't making any money. The overall cannabis sector lost immense amounts of money because there's so much upfront cost and investment, and it's a very competitive field because it's not something you can slap a patent on and really kind of trademark in a sense. What you have is a bunch of other people growing the exact same cash crop, right? So as much as there is demand for this market, it is very difficult to make it profitable this early on. With any new emerging industry or technology, you're going to run into that. So that's exactly what we saw here. And again, if we understood just how crazy and off the chain the price was compared to the fundamentals, this was very clear, right? That as we pushed up higher and higher in price, and the technical indicators gave us the signs that the trend was reversing as well as price patterns, that the fundamentals would eventually come into check, right? So we had the fundamental incentive from understanding the trend. All right, we'll go ahead and take a quick look here at ACB, Aurora Cannabis. All right, so Aurora Cannabis is a prime example here. Take a look at all 3 indicators: lower level on the squeeze momentum, cross on the MACD shortly after, and then also early on before any of the other indicators, squeeze momentum, or excuse me, the stochastic RSI entering in to a lower mid-range here, right, after visiting the top multiple times. Another thing to consider as well, that we not only saw this multiple times, right, before downtrends, but also taking a look at price analysis, lower highs every time, right? Now you can consider maybe the wicks here being higher, but I'm looking really for closing price here. And every time on the weekly, we set lower levels for the close. So a very important thing to take into mind. And again, as we talked about, cannabis was in a very much a bubble. It was very clear if you understood the fundamentals. All right. So let's go ahead here and talk about our last category of utilizing our trading strategy. And this is one that I will say confidently that we did call pretty well back in October of 2018 in equity markets. We're going to be taking a look at the FANG stocks. Now, for those of you who may not know, if you haven't traded in equity markets before, it's no big deal. The FANG acronym is standing for some of the major tech companies that make up a huge chunk of the value of the NASDAQ, which is one of the major broad indexes for the stock market. It's made up of Facebook, and in some cases, people add a second A in here, but it's predominantly Amazon, sometimes includes Apple, Netflix, and Google. And we'll take a look at all 5 stocks real quick to get a feel for this. So, Facebook. All right, Facebook is probably one of the few examples here that I think works very good. Okay, or sorry, actually, I meant to say it's probably not the best example in this case. We'll take a look at Amazon and Netflix, which I think were very much some of the cleanest here. All right, so let's go ahead and take a look at the weekly chart here, and we can see here from the market peak here, right, we saw a decline, squeeze momentum across on the MACD on the exact same week, and both lines entering into the mid-range here. Now, this was a little bit of an anomaly. We saw a big drop here in Facebook stock as well as most of the major tech companies. And we'll talk about understanding the trend here in a little bit that justifies why this happened and why we were actually early to calling this back in September, okay? So again, it's just as important to understand the trend in this case, or the potential reason why there might be a shift in trend before you make any kind of trade, okay? So outside of that, in that sense, we had our indicators showcasing this, in this case as well. Price had been on a very parabolic run up. Tech companies were reaching very high valuations. In this case, we didn't have too many price points though to really get a feeling for this, right? We had blown past 200, which would have been the big even in this case, so it doesn't really apply here. Now, why is it that tech stocks like Facebook, like Amazon, all these companies, Netflix, had a big drop, big time drop? Well, they had not only been on a relatively parabolic rise in some companies, as we'll see in a moment, but along with that, they were very, there was two things, one thing to really keep in count, that tech stocks were really rallying throughout 2018 in the later part of the cycle because of a fundamental tool that can be utilized known as stock buybacks, where companies take cash on the books or they borrow money in order to repurchase their own stock, to take shares off the market. And there's a window of time during periods where a lot of companies on the S&P 500 or in equity markets in general are reporting earnings that states that they cannot buy their own stocks during that period of time, during about a 90-day window of reporting their earnings. And the important thing to take into mind here is that there was a certain amount of companies that were in this short window of time. And because of that, a lot of companies couldn't buy their stocks, predominantly these big tech giants. And it led to a lot of buy-side demand in the market vanishing. And there goes the decline we had, and the continued decline that most FANG stocks saw for a multi-month period going into December of 2018. So again, sometimes you have to focus in on one of the key things. It really depends here if you're more of a technical guy, if you're more on focusing on the fundamentals, you know, in that case, it doesn't have to be financials in this case. It can be, again, understanding that markets are inflows and outflows of cash, right? As we talk about a lot on the channel. That's a principle that I always mention. It's, you know, markets are only going to go up if there's more inflows coming in, more cash, more buyers. And if the buyers aren't there, if it's something artificial like stock buybacks and that's blocked, or the cash flow stops running out, prices are going to decline. And it's important to watch things like that. All right, so we'll go ahead and take a look at a few more predominant examples. Amazon is, I think, one of my favorites because it plays into all three things. So we already had for a while a decline here on the squeeze momentum indicator before seeing a shift trend down to the red side here. But we had, again, a lowering level here, a divergence on one of our indicators, another big warning sign outside of just simply declining, right? And again, we saw a decline here start to formulate after the rise up here into the highs on the market price. We also had as well, again, the MACD setting in a relative top here, right? We had a consecutive top here on the MACD and across here as well, right here on the revisit back to the peak here before we went down into a downtrend, downward to around $1,300. Stochastic RSI, one of the earliest indicators, both lines dropping again well before we started to enter into the downtrend, weeks before. So all three indicators checked out. Another thing to take into mind is price analysis. Was there some interesting price pattern going on? Nope. The only thing that was going on was a parabolic run-up. And what we look for when it comes to parabolic run-ups is those big, even levels. It was simple. $2,000. That's all we were looking for. And we'll find that during this period of time, as tech companies were moving in very similar patterns, we see a similarity in the price analysis in this case of reaching big even numbers and levels during these euphoric periods that people are really chasing and trading up to. We'll see that with Apple as well in a moment. But the third thing to take in mind as well is the tech stocks. And again, we already talked about the broader range. I'm not going to repeat myself. The stock buybacks are playing a big role in propping up these stocks. Take a look at Apple. All right. So again, all three indicators. Decaying squeeze momentum weeks before the sell-off. Cross on the MACD before the real sell-off kicks in. Stochastic RSI helping to lead us here, letting us know the momentum is dying. Outside of that as well, price analysis. How did I feel confident that we were going to get a correction as the stock buyback started to roll in? Well, in the price sense, $1 trillion market cap. Apple was the first company in a long time to reach $1 trillion market cap. We had one company before then, but at that time, during that time period when Apple reached $1 trillion, it was the only company. So this was a very significant level, and it showcases that we've been on a very big tear in equity markets, which can frighten a lot of investors in thinking about, can I really expect a return on Apple stock? Now, why is that important? Well, if I'm a buyer, if I'm considering buying into a stock like Apple, if I want to make, say, a 10% return on my investment, maybe over 2 or 3 years, I'm going to need Apple to gain $100 billion in valuation. So you start talking about markets of scale here. And as Apple is entering into its dinosaur phase as a company, it's starting to peak out on its potential. It's not innovating as much, things that sort of $1 trillion market cap can scare a lot of people. So again, big even levels in price and big even levels in market cap can play a big role. And again, the third principle here in the sense of understanding the trend, we knew that stock buybacks were playing a huge role. In fact, when Apple announced a $100 billion stock buyback here during, I think it was during December or January, and they announced it, look at what happened to the trend, right? So it seems like we understood quite well that the principle of inflows and outflows and the lack of stock buybacks, but also the rekindling of stock buybacks are going to very much determine trend. So we, in that case, in the third principle, I think more than anything here, outside of the price analysis, outside of the indicators, really went over in understanding the trend. I really feel it's one of the most important principles here because there has to be some fundamentals driving these cycles, whether it's something like speculation or if it's rooted in the inflows and outflows principle that we talk about a lot. All right, so let's go ahead and run through these last two tech stocks here, and then we'll call it a day. Netflix. All right, let's take a look at the three indicators here. Already very early on, before we reach the peak, showcasing lower levels here on the squeeze momentum. We had as well the MACD resting here, not making a cross close to it, but in this case, getting the cross here when we started the decline here. And then also the stochastic RSI again, kind of giving us warnings ahead of time. But in this case, for the third indicator, kind of confirming here at the peak, we had a decline. We had a re-entry at the top and then a decline. Now, the one thing to take into mind here again, to call out in the sense of potential failure of the indicators, if we use the 2/3 principle, in this case, we would have had 2/3 satisfying it. We would have had the stochastic revisiting the highs here, going back into the channel. So in that case, you can consider it a failure. We did get a nice correction here, but again, we have to be honest in this case. It is usually more optimal to look for all three to check off. And if you happen to find it that on the monthly as well, you're getting the same, 2/3 majority or 3 out of 3, and it's really 6 out of 6 when you're considering the weeks and the monthly, sometimes that can be a really good sign that you got a golden opportunity when all the technicals are playing out like that. But again, it depends on what indicators you're using and if they've shown consistency in the past. For me, these are three of my favorites, especially on the weekly time frame. But going on here to take a look at price analysis, well, there's a few things we can take a look at. Big even level here, 400. Again, very big similarity because all these tech stocks, they're in the FANG acronym, they're seeing similarities in how their prices act. And again, we have to consider in mind these $100 intervals are big for Netflix. Take a look at 200. Look how long on a multi-week period that held back the trend from continuing, right? So this big $100 intervals are big. And again, you can see here as we enter towards around $300, we got choppy price action, things of that sort. But again, big even levels are very important for price, for price of an asset and the trend of an asset. Now, something to take into mind as well here, again, as Netflix has started to decline, take a look here, right? Decline of the squeeze momentum, cross on the MACD before we even started the real sell-off, and again, the stochastic RSI entering back in here, right? all before we really started the downtrend. The momentum was not there. Think back to Canopy Growth Corp, right? This Canopy Growth Corp and also ACB, Aurora Cannabis, was pushing sideways. It wasn't really declining, but it was showcasing months ahead that the momentum is not here like it was back here, right? So you have to know when to cut your losses. And sometimes if you are trading the trend here and you got caught in the downside, sometimes you're lucky enough to get these rebounds. That's very similar to Bitcoin when it went to 20,000, crashed down to around, I think it was the $6,000 range, then went up to 12 or 14,000. Sometimes you get those fortunate opportunities to claim back some extra profits, right? All right. Last one I'm going to show you guys today, I know I've been doing a lot of talking, is Google. Now, Google here, in this case, has been actually probably one of the probably least kind of predictable ones here, I think, in the tech stocks. Didn't have as stark of a correction compared to the other players, and Google's been more of a consistent company. I think it's because of its monetization being so strong as a company fundamentally. But we can see here, taking a look back here in January of 2018 when the market really started to set up its peak, and this is also as well when we were seeing most of the general tech stocks here in August to September starting to peak. We can see here in most cases that the indicators play quite well. We see here the squeeze momentum indicator declining. We see a cross on the MACD, the blue line going below the orange line, and the stochastic RSI. This time, as well as over here as well, and then over here as well, right? All three indicators, right? Then the MACD had a little bit of a delay here, but again, looking for a 2/3 majority. Sometimes if you want to set the standard here, if you actually want to make a play and set for 3 out of 3, then you can determine that for yourself. It depends really on a combination of all three steps that I consider. Now, in the sense of price here, 1200 is a big even level, but there really wasn't much we could tell in price here. So sometimes, again, if there is not a clear enough signal here in price, whether it be through price patterns, higher lows, lower highs, lower lows, lower highs, whatever it may be, whatever you're using in this case from your suite of tools, if there's not enough to convince you that there's a trend there, there's not a need to trade it, guys. Right? There's so many different financial markets out there. So that's an important principle. Don't get too eager to trade as well. We've talked about that on the channel, how an eagerness to trade can be a death sentence for traders. So make sure that there's enough checking off your checkbox. And you might have some things outside of this as well that you might want to add. And I do not want to recommend that you guys don't do that. Okay, that's a weird way of wording it. I recommend you guys add extra layers of security here to increase your probabilities. See what works and apply it to your strategy. It might cut out some opportunities that eventually maybe turn out to be what would have been good opportunities to invest in. But don't beat yourself up. There's opportunities every single day to the upside and to the downside. Very important psychological principles to keep in mind. So anyways here, guys, again, we can also see on the reversals. One thing we haven't really talked about here is using, again, them in the opposite direction as we talked about earlier, right? You can see the bottom here. Higher low here in the sense of the squeeze momentum indicator, the cross here before we started the uptrend, and then also the stochastic RSI getting back into the mid-range right here near the bottom. So you always see the stochastic RSI is a pretty good front runner compared to most of the indicators. That's at least what I find. You guys might find different compared to what markets you look at. But we have taken a look at a lot of markets, and boy, this has probably been at least 30 minutes of me talking straight. If you guys have made it through this entire video, I think it's just as amazing as me talking 30 minutes straight and only stumbling a few times and stumbling on my words, I guess. I always do that sometimes. But I like to keep it organic, guys. I want to showcase to you all, this is really how I've gone about trading. And, as a little bit of commentary here before we close off the video, this is not something that I've come up with overnight, guys. It's something that has, kind of become my strategy over a long period of time, because I used to be sometimes overly reliant on the technical indicators. The first mistake I made as a trader and investor is I was always overly, optimistic on trying to understand the trend here, right? I didn't look for technicals to come into play. So, for example, as I mentioned, the cannabis industry. I used to be so not only personally pro-legalization of cannabis, but I was like, oh, this is going to be a huge market opportunity. And one of my first mistakes I ever made, and as I honestly talk about on the channel, was I invested in a penny stock in a medical marijuana company that was selling CBD products. It was one of the few opportunities on the market, but I ended up losing about 30 or 40% on that. But on the other end as well, I was using technicals to trade a solar stock. So these are my first two trades that I did. And luckily the gains on that neutralized any losses. So it's good learning principles here. And that trade on the solar company, as well as the loss that I made on the cannabis trade, were important and kind of developing how I actually go about trading nowadays and why I love being a macro trader. A macro trader to me is, a trading position that you have to take on if you love discovering emerging trends, whether that's technology or shifts in markets. And to me, that's my bread and butter. I live for it. I love it. It's not so much to make money. To me, it's a game. It's a game of applying my human ability to try to understand these markets. And if you find that same fascination, perhaps this video has been good for you. Perhaps it shows you a new way to approach markets that fits that kind of way of looking at markets and getting excited about markets. It should be something that's fun for people, especially if you're going to be doing it for a lot of your life. And not to mention as well, it's really hassle-free because we're waiting for the check marks to come and arrive. And after that, we can set up our trade, assess our risk and reward ratio, which is another topic we didn't talk about in this video, but you can utilize depending again on what you're expecting out of a trend and what's your risk to reward. That's something that really has to be determined by you. All right, you guys, I've talked long enough. I think we all agree. This has been a very long video, but a very in-depth and I think a very valuable and rich video comparative to a lot of the stuff that we put on the channel. If you guys liked this video, if you stuck around, I never asked for it, smash that like button, smash it up. It's free. It's not going to cost anything outside of a click on your mouse. And if you haven't already, if you're a first-time viewer to the channel, or maybe you've come back a few times, definitely consider subscribing. Hit the bell icon so you don't miss any of our daily updates or other educational material here on the channel where we do in-depth daily market analysis. But anyways, everyone, that is going to be it for the video. I'm going to stop talking. I'm going to go drink a gallon of water after talking about markets for 40 minutes and catch my breath. That's going to be it for the video. I hope you all are having a great day wherever you are, and I'll see you all in the next video. Stay tuned.